Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. And our guest for this week's show is real estate investment expert Elaine Stageberg. Now, Elaine is a psychiatrist, mother of four, and owner of Black Swan Real Estate. She owns and manages a portfolio of over 330 million of assets with a specialty in multifamily apartments. Through real estate investing, she reached financial freedom in her 30s and now helps others do the same. And so, guys, with that, it's an honor to welcome Elaine Stageberg to the show. Elaine, how you doing today?
I'm doing so well. It's great to be here and just have an opportunity to chat with you and connect with our listeners here.
I agree. Excited to have you on, and excited to peel back the curtain and get a better understanding of you and your business and everything about Black Swan Real Estate. But before we dive into that, Elaine, I gave you a very brief introduction there. Surely that isn't the extent of your background and your bio. And so maybe if you could take a few moments, fill in the blanks for us. Obviously, you're a MD, mother of four. I mean, that's like two jobs in and of itself. And so just talk to me about your background and how you found your journey into real estate. And then we could talk a little bit more about Black Swan Real Estate and what you're up to today.
Yeah, excellent question. So my husband and I like to joke that we like to do everything at scale. So we like to, grow our company. We're very vertically integrated. We have a number of companies that serve each other, and then carrying that on to the home front with a large number of children as well. So we started, kind of a typical, somewhat boring story. We were freshly married, and we had, mentors in our lives and people that were a couple generations ahead of us. And when we talked to them about how they built their wealth, there was a very consistent theme of real estate investing.
Mhm.
So we got married, and we were fortunate that we both owned our own homes. So we turned my home into a rental, moved into his home, like really kind of the most boring story possible for starting real estate. But I call that like the little bite by the bug. So that was in 2011. So the market was struggling at that time, and so I was able to see that property was producing a little bit of cash flow, and the mortgage was getting paid down, and then most importantly, it was growing in value as the country came out of the recession there. And then, we really focused on intentionally real estate investing. And we call that first one kind of accidental landlording. So we saved up our money, bought a VA foreclosure that had been vacant for 9 years.
Oh my gosh.
Everything that you can imagine about how terrible it was, like, is true. We were childless at that time, so we did most of the renovations ourselves. We had to hire, professionals for things like the roof and the HVAC and the electrical, but we rolled all the paint, laid all the carpet, took all the carpet out and laid tile, redid the kitchen, everything we could. And that's when I really got bit by the real estate bug. So our model has always been a BRRRR business model.
Mhm.
So we cashed out of that deal, and altogether it only took about 3 months. And all of a sudden, I had this nice, freshly renovated property. It was cash flowing. A lovely family was living in it. And I had more money in the bank account than I had started with, and then I could do it again. And I basically said, I want to do this as many times in my life as I possibly can. I remember that moment at the closing table when they like slid the check across the table, and just my husband and I looked at each other, and we both had the same thought. And as soon as we got to the car, we both said, like, we just have to do this as many times as we possibly can in our lives. So during that time, I was training as a physician. My husband was a career technologist. We, kind of carried on with those professions. And then as we built our portfolio, we reached financial freedom and had big decisions to make about, kind of what do we want, the rest of our lives, so to speak, to look like. And for many years, people were coming to us and asking if they could invest alongside us. And so eventually we took that leap, and that's how we've grown the company, how we've scaled it over the last many years. And so we have the same business model all the way back to that first one, a BRRRR business model, cash out, get to a zero basis in that property, have an infinite rate of return, and then hold it indefinitely. And here we are. Had 4 children along the way too.
Yeah, no. So I want to talk about that. I want to talk about juggling, right? So let's talk about juggling, not just your professions back before you actually had children. Juggling the professions with actually in there laying carpet, laying tile. Obviously, probably after that first rehab, or maybe after the first couple, like you started outsourcing some of those
Absolutely.
items to to
Absolutely.
handyman and to subcontractors. And so ultimately, like you guys realized very quickly that your time was probably better spent finding more opportunities than it was in there getting paint underneath their fingernails, which is, it's still fun to and it's definitely it's a very humbling experience to to do that
Mhm.
yourself. And you
Yeah.
learn a lot along the way. But just talk to me about the the juggling aspects of professional life, building this real estate business. also growing a family, raising 4 children, and then fast forward today. So you bought that first one. What was the year that you bought that first rental property that you guys were in there laying the tile in? What year was that?
2012.
2012. So that's not that long ago. I mean, we're literally talking a decade ago.
Mhm.
And so the evolution, what's it look like? And to where you're now, you guys are a vertically integrated company. You've got over $300 million of assets in your portfolio. There's a lot going on there in between those 10, 11 years, right? And so talk to
Yep.
me about the evolution of not just the business, but of the family at the same time, and getting out of your professional careers and moving into this full time. Again, I want to learn more about how you were able to accomplish that in such a fairly short period of time. It's impressive, very impressive.
Thank you. Thank you. So I think the kind of the most important thing is there really has to be a big why. So, you're absolutely right. In all of those years, there were a lot of sleepless nights,
Mhm.
a lot of tough decisions, a lot of, kind of asking ourselves, what have we gotten ourselves into or what's happening here? But we were just so committed to creating financial freedom for our own family. So both my husband and I were raised in families that really struggled with poverty, and we saw the stress that that caused on our parents. And when we got married, we just decided, that that would never be the case for us. And so that's why we were asking these mentors that were ahead of us, how have you built your wealth? What's been successful for you? And they all consistently said real estate, real estate, real estate. So you have to have a really big why. And in the beginning, our why was creating financial freedom for our own family. And then when we had reached that milestone, we were able to see the benefit of that freedom, like in our day-to-day lives and the decisions that we would make. And then it became, well, how can we help as many other people as possible have this same level of freedom so that they can make decisions about, how much are they working in their job, or what vacations are they taking, or,
Mhm.
can they put a kid through college or help mom and dad with, aging health needs, all of those things. And that big why kind of keeps you like magnetized toward the future, that makes those hard days maybe a little less hard. I would say that's kind of, step number one, or like the base of the pyramid, so to speak. And then along the way, just really recognizing that the more we wanted to expand our dreams, the more we needed to involve other people.
Mhm.
So we had self-managed all along. That was just a value of ours. And when we got to maybe, I don't know, it was probably 20 or 25 properties. These were just single family homes. There was no way we could continue to manage ourselves. Just there was always a maintenance need, or a property needed to be turned over, whatever it was. So we had the decision at that time, do we hire a third-party management company, or do we create our own? And for whatever reason, we were crazy enough to create our own. And so then we really started to build a team. And today we have about 30 full-time employees on our property management team. At any given time, we probably have about another 100 1099 contractors, like our plumbers and those sorts of
Mhm.
things, working for us. And the bigger the vision, the more people that need to be involved. And so, we know so much in real estate about leverage, right? We think about mortgages and leverage, but really, I have found the most valuable type of leverage is really skilled, committed, excited human beings that see your vision
Mhm.
and want to be a part of it. And then all of a sudden, like in any given week, my company can accomplish 32 weeks of work, right? Like that's just like a mathematical certainty. And then all of a sudden that question of, well, how are you getting so much done? Well, I have this beautiful team that's,
Yeah.
supporting our vision and helping us get there. And then because we decided we wanted a big family, just doing that same thing in our household. So very early on, we started outsourcing household tasks. And I think particularly for women listeners, like just the data shows time and time again, no matter how lovely our partners might be and how much they contribute, women do more of the household work. So think about, is there a way to outsource that? And as I grew my company, it was just very intuitive that my investors probably wanted me working another hour in the company, not spending that hour, folding laundry. And so they're just building a team at home and recognizing that if we had these big dreams for the number of children we wanted to have, we would need that support in that space of our life as well.
I
We are
love
just
it.
so blessed. We're just, surrounded by dozens of people that are just, we have this common vision that we're heading toward.
Yeah. So talk to me about about just really instilling your mission and your values into all those that you hire, right? Like, the first part, that's actually identifying the right prospects or candidates that are going to be, you think are going to be a good fit for, again, that are good for, overall understand your philosophy, the
Mhm.
mission and the values that you guys have. But then that's one step of it. Like that's challenging, but it's fairly easy. I think the hardest part is actually continue to instill those values throughout the company and getting people excited every day that they come into work. So give me some secrets there of how you guys been able to accomplish that.
Yeah. It was hard at first. I'm not gonna sugarcoat that, but certainly we have learned over time as leaders to really hire for culture, and then
Mhm.
you can teach technical skills. So particularly in our property management company, almost no one in our property management company has previous property management
Wow.
experience. And in fact, we have found that those folks that we have hired with property management experience, they just kind of come with some baggage and
Yeah.
sort of a different way of thinking about the industry than we do. I mean, we really think of property management as a customer service
Yes.
industry, and that's not necessarily the norm in the industry. So a lot of our team members like previously managed, say small retail shops like a GNC or JC Penney's,
Okay.
those sorts of things, restaurant managers, those sorts of folks where they have a background of service and customer service, and then we can teach them the property management piece. And so just
Interesting.
learning through repetition to hire for culture and then teach
Mhm.
the technical aspects of it. And then continually telling our team, I'm a big believer that we have to transmit culture to our team, but then our team has to transmit the culture to each other, right?
Mhm.
Because with the vision of the scale that we have, there will be a time that we will not be able to impact every single one of our team members directly. So just kind of a quick nugget that I can share is having a common language so that you can instill the meaning in those words and then use them repeatedly, and then your team members use them with each other. So a thing that we say every single day with our team is we are an elite team. We have elite standards. We
Mhm.
expect elite outcomes. And then they start to say that to each other, and they'll start to ask questions like, is this what an elite team would do? Is this how an elite team would handle this maintenance ticket? And there's just this feeling as a leader when you kind of hear that, outside of the door,
Yeah.
but it's a simple way to share culture. And then all sorts of other things, team meetings, getting your team together consistently and talking to them, sharing the vision, letting them know that, it's more than a job, that you're working toward these outcomes and here's why you're doing it. But I think just a quick thing that someone can pick up from our time together is having a shared language.
I love that. I love that. I want to back up. I want to make sure that we don't skip over it about identifying. You had mentioned that a lot of the hires that you've made, the best ones, have not had a previous property management background, and those that you have hired that had expertise in the property management space typically weren't a great fit.
Hmm.
And I think it said restaurant managers and retail shop
Hmm.
managers, like you mentioned GNC, I believe. And again,
Hmm.
drilling down a little bit more to a micro level, because I think this is important. As folks struggle today to find good candidates and good fits for their company, their particular company culture, like where should they be looking? And again, if we speak to property management, I think the initial go-to for most folks that are building a real estate company and have to hire for their property management division, they think that more than likely it's probably going to be the best if they can find someone that has prior property management experience. Like that's where our
Hmm.
minds go. But that doesn't sound like that is the case, and on a large scale has not worked for you. And so, again, getting down to a micro level, have you found that you mentioned GNC and you said restaurant managers, but like corporate type entities, folks that worked at corporate type entities, like an Olive Garden restaurant manager and a GNC, which is a large corporate conglomerate, or smaller, small time retail shops like mom and pop shops or
Yeah.
mom and pop owned restaurants. Again, I know it's getting pretty granular, but the reason why I ask that is because obviously there's lots of different training initiatives that exist on the corporate scale. They throw a lot more money at training initiatives, which one would expect that might yield better results, but maybe not. So anyway, just curious there as to if you've seen any patterns.
Yeah. So I would say about probably half of our team comes from much smaller businesses. There's certainly
Yeah.
something that's kind of trained in someone when they have worked for a fellow entrepreneur. Like
Hmm.
one of the people on our team helped a pizza restaurateur really scale his business. So even though pizza has almost nothing to do with real estate, he knew the life cycle of an entrepreneur. He knows how we think. So he was able to step into our business and already understand our mindset,
Hmm.
and then we could teach him the property management piece.
Right.
Another great source has been managers of hotel chains. because, I think we all know that the expectation in a hotel is much higher than the expectation in long-term residential real estate. Again, there's just much more of that customer service piece. So that has been a great source of really qualified, really committed people for our company. And then tactically, what we did in the very beginning, one of our very first hires, was we knew that we would need to have a lot of hiring over the coming years to grow the team. So one of our very early hires was a person that we felt we could trust to build the team. So that person was a former Marine, had done recruiting for the Marines, and then had done recruiting and training for a large hospital system in our area. And again, he had no property management experience. He was a very experienced real estate investor, and that was helpful, but had never done property management. But he was skilled at recruiting and training. And to this day, he has recruited and trained almost everyone on in our company. So if someone's listening and they're either thinking about, starting to hire a team, or maybe you already have a team, but you're thinking about growing it, think about finding a person who is extremely skilled in attracting good talent and then training that talent and bring that person in as a core member of your team. And then some of the industries that I mentioned there have been great places for us to find talent. And then through the Great Resignation that has happened through COVID, being able to offer people, people will no longer just work for a paycheck like that. That's pre-COVID, that's gone. People really want to work for a sense of identity and a sense of doing something that's, more than just, what they're doing that in any given day. And so being very intentional about sharing that message with your team so that they understand, this is why we take care of maintenance tickets this way, or this is why we have this policy, because it leads to this outcome. And I find that really helps people be very committed to the company.
No, I love that. Absolutely love that. And so, speaking to your staff on the property management side, which is, I think you mentioned about 30 or 31 folks on the property management side, is it in office, given the shift in office environments over the last couple of years with COVID, with people working home and then hybrid? Does most of your team, are they remote? Are they in a dedicated office together? How does that work?
So we're a little kind of different than the norm there. So we have one overseas VA that kind of takes care of turning on utilities, turning them on, off, all the things that need to happen as residents move in and out. We have an accountant who is remote. We had a long established relationship with her, and then it just made good sense to keep her because she knew our business very well, and she's remote. We are pretty strict, though, that she visits 1 week of every quarter, because we're big believers in that shared culture, that shared time together. And then everyone else is full-time here in the office.
Okay.
Yeah. A little bit different than kind of what you might think.
No, it's interesting. I mean, we historically had always been an in-office company, and COVID happened, and our lease happened to be coming up for renewal at the end of March of 2020, for another 5-year renewal. And so, the office landlord, he wasn't being all that flexible. We wanted to kind of just go, for a year and just see how it, without signing another 5-year lease, and he wasn't willing to do that. And so we just went remote at that point, and we were already set up to do it. We used Slack. And so we were very proficient with that platform. And so it was very easy for us to go remote. And then I guess what we found is, like, there's definitely downsides to not being in an office together. Just that face-to-face, just the ideas that just come about, as you're next to each other, as you're, an office away, or just, if you've got an idea, I can walk over to, my business partner's office and share it with him right then and there. I don't have to schedule a Zoom call with him. Right. You lose that. But one thing that I found we have gained that's been a positive out of being virtual is the ability to hire on a national scale. This really expanding our footprint, being able to, we live in Tampa Bay. It's a fairly, just like you're up in the Twin Cities. I mean, these are big markets, right? There's a lot of folks that want to live where you are. There's a lot of folks that want to live where we are. There's already a lot of people that live here now. And so there's definitely a fairly large pool of talent. But it opens up that pool of talent when you can expand your reach beyond your immediate boundaries of where the office would have been located. So that's definitely been one of the benefits that we've seen.
Everything about.
Yeah, I don't think I know everything, but
it's certainly something we've thought about, particularly for the very technical, highly skilled parts, like our attorneys, our accountants, those sorts of things, being able to have that national reach.
Yeah,
but we're not there yet.
No, I feel you. I feel like, again, there's still a sense of torn in the company because of should we get an office? We probably should have it hybrid for the least folks that are here locally. It'd be nice to have a place to go. And anyway, so we haven't figured that one out yet, but we're sorting through it. I don't think there's a perfect answer. I just don't. I don't think there's a perfect solution at all. There's pros and cons of every different scenario that we talk about here. And so switching gears real quick, I want to make sure that I'm respectful of your time and the time here. And there's definitely a couple other things I want to get through, Elaine, before we say goodbye to one another. And I want to back up to the building of your business. You guys start with single family, and then most recently, you guys are, for the most part, correct me if I'm wrong, you're focused on larger multifamily properties. Is that where most of your time is spent today?
About a third of our portfolio is single family homes,
Okay.
and 2/3 are large multifamily communities.
Okay.
So we still acquire a lot of single family
You
homes.
do? Okay.
The market has been tougher as inventory has just gotten lower and lower and lower. So we're acquiring fewer than we used to, but that's because of market dynamics, not because
Okay.
we want to acquire fewer. You know, we say that, you know, we invest in long-term residential real estate, so single family, large multifamily. But even within that asset class, there's like it's a small difference, but single family behave differently than large
Sure.
multifamily. So there's like a tiny bit of diversification by including both in our funds.
Okay. Okay. So you actually have them in your funds. You've got them kind of
Mhm.
combined. You've got single family assets along with multifamily assets. Okay. Very interesting. And then the acquisition side of your business, what does that look like? The reason why I ask that is obviously there's a lot of efficiencies that come along with buying a 300 unit apartment building than trying to actually go buy 300 single family homes. I know because I've built a pretty big portfolio of single families, and it's a lot of work. Nowadays, it's a little different because there's actually a lot of portfolio owners out there. 15, 20 years ago, that just didn't really exist. It was mostly mom and pop landlords that might have one, might have two or three, but very, very rarely did you ever come across a portfolio of maybe 5 or 10 or 15 or more homes that you could buy at one time. And so would love to get a sense of what the acquisition side of your firm looks like. Given that one-off single families is a very different animal than that of buying a, 30, 40, $50 million apartment complex.
Yeah. So we've actually never acquired a single family home portfolio, because
Okay.
one of the reasons we really like single family homes is you get them vacant. You know, the extreme majority of the time you get them vacant. And since our business model is to do renovations and then to refi out, the faster we can do that, the better. So we kind of call our single family homes like little piggy banks or little money machines, but they're just so fast. So we have a team that does all of our single family home acquisitions. They're trained in exactly what we want. They're the same team that does our leasing. So they're very close to our end consumer, and they hear from the people that are renting these properties what kind of kitchens they want, what size bedrooms they want. Like, I remember a few years ago, like when the trend changed to closets no longer have doors, like our leasing team educated me on that because that's what they heard time and time again of what people wanted. So single
Is that
family.
true? I didn't know that was a thing. I mean, I guess, yeah,
Yeah,
interesting.
they're
Okay.
just open. If you think about it, they're just open, which
Yeah.
is kind of crazy. But I guess if you have, a dresser there, then it kind of expands the size of the room, and you just have to keep your closets really neat, which I'm not about to do as a mom of four. Like that's where the skeletons go.
That's funny.
But single family is just so fast. You can acquire it. You can close in 7 days with an all cash offer, start renovations that next day because it's vacant. We work with our local regional banks to set up what we call guidance lines. So we might say, we'd like $5 million of lending for all single family homes. They'll be 3 and 4 bed, one or two bath, all have 1 or 2 car garages. And then as we renovate them, we'll call you and say, hey, we're ready to refi out of 123 Main Street. And we plan all of that in advance so we can acquire a home and then get the cash out in maybe 90 to 120 days. Whereas in the multifamily side, it's much more like moving a glacier. Like even just getting to closing could take 120 or 180 days. Of course, you're not acquiring apartment buildings empty. So you have to, plan your renovations around vacancy and leases ending and those sorts of things. The spread in multifamily is often larger, but the value that you're able to create through renovations and management improvements than on the single family side. So there's more value, in my opinion, there's more value created on the multifamily side, but the value is created much faster on the single family side. So you can speed up the velocity of capital. And since any given fund has both, then there's kind of the average of both in those funds. So that's why we like both of them.
And have you, as you've grown the multifamily side of your business, just, obviously multifamily in general has been incredibly competitive over the last, 5 to 10 years. Really, last five has been hyper competitive,
Mhm.
especially given that you're in the Twin Cities, you're in a major market in the country. And so just, finding opportunities when there's a lot of others hunting for that same opportunity. And really the bigger part of that question, it's the same thing that we experience in our business is when institutions are part of the competition, their source of capital typically is cheaper than that of
Mhm.
ours, and makes it a lot easier for them to pay a slightly higher or sometimes much larger dollar amount than what we ultimately can pay. So, how have you guys
Right.
been able to remain competitive and still buy quality assets at fair prices?
Yeah. You're absolutely right, right? Our investors want return. They don't just, want to park their money at a, 1% return rate that some of these institutions are able to pull off.
Hmm.
So we're about an hour, maybe hour and a half south of Minneapolis, St. Paul. We're in Rochester, Minnesota. And there is some institutional capital here, particularly for the much larger communities, like say, those 300 unit
Hmm.
apartment communities. But for the most part, there's not a lot of institutional capital here, which is a big part of the reason we like this market. So we are able to have a great deal of dominance here. We're the largest housing provider in Rochester, Minnesota. And then our second market is Tacoma, Washington, which is very similar to Rochester. We have a smaller presence in Tacoma, but our goal is to continue to acquire there so that we have, a good deal of market share there and can have that dominance there. But we're big believers in what's called the blue ocean strategy. So the
Hmm.
red ocean is where there's a bunch of fish and a shark goes over and starts eating those fish, and then there's blood in the water. So other sharks go over and say, there's blood in the water here, so I'll go over and get some fish. And the blue ocean strategy is you kind of go off by yourself and you find those fish, which might be harder to find because you don't have that blood to kind of, look for. But then once you have those fish, they're sort of all yours.
Yeah.
Just big believers in the blue ocean strategy. I know that's, a big part of, what you do too with
Yep.
markets that aren't, kind of the markets that you see over and over again. And it allows us to have great relationships with the brokers, great relationships with our lenders, market dominance on the property management side, great relationships with the city to get our permits through and all of that. So we would much rather be, big fish in a small pond than a
Yep.
little fish in a big
I
pond,
love
so
it.
to speak. Mm-hmm.
Last thing I'd love to hit on before we wrap it up for the day is just again, we were recording this on March 21st, and we've had a very interesting past week.
Are you
With
going to ask if the Fed's going to raise rates this week or not?
No, no, not. I don't. I mean, just I think the bigger conversation is around just the sheer volatility, and there's been so much volatility in the debt markets for many months now.
Mm-hmm.
More so even given the massive failure of a few banks last week. And so
Yep.
um you know but lenders were already kind of pulling back a little bit, tightening things up, and putting some pretty stringent debt coverage initiatives in place as far as what they're willing to loan, and it's cutting LTV significantly. And so there was already kind of challenges being created, not just with higher rates, with a litany of other things that were kind of snowballed thereafter. But just talk to me about your business and what shifts you've made to adapt to really the massively changing times that we find ourselves in today, and what are you doing to continue to execute on that same business model that you guys have built over the last decade or so?
Yeah, excellent question. So I'm a big believer that, the magic in real estate is 50% the deal and 50% the debt. And there's
Mhm.
a lot of emphasis on debt right now. There hasn't really been a lot of emphasis on debt, say, 2, 3, 4, 7 years ago. It was just, what's your deal? What's your deal? But it's really the two together where the real
Mhm.
magic happens. So we have a very different lending strategy, particularly for a firm of our size. All of our debt is with local regional banks. We don't have any Fannie Freddie debt, any institutional debt, debt from debt funds. It's
Interesting.
all
Okay.
local banks where, we know the banker, our kids play sports together, we have
Hmm.
lunch together, we see each other at the grocery store. So we have those deep relationships. And then every single penny of our debt is fixed rate. And not a single, so our highest interest rate is 5.15% in the entire portfolio. The shortest term that we have left to work with is 4 years. So we're pretty comfortable right now.
Yeah.
We see a lot of the worry that's in the market and what we're seeing our colleagues go through. But for our portfolio, we're really grateful that our previous selves, instead of taking, say, 2% variable, which was out there, not that long
Sure.
ago. We took 3% fixed. And then today we just have a lot of comfort with that. So local regional banks, close relationships with bankers. Because we have those close relationships, we're able to tour them through our properties, send our rent rolls over, just whatever they need to just continually remind them why we're a good lending option. And then tactically, what we've been able to do, if anyone's thinking about a cash out refi, but wondering maybe you have some fixed rate debt, is, oh my gosh, I don't want to give up my 3.25% interest rate debt that I got 2 years ago, but I'd like to harvest out some equity. Is typically what we had done was just a plain Jane cash out refi. Today, we've worked with our banks to put a second piece of debt on those properties so that we're able to keep that, say, 3.5, whatever that original mortgage was, but then put a smaller second piece on. And those are at 4.5%, 5%. But then we're able to harvest out that equity and get into that infinite rate of return period. So that's kind of the tactical shift that we've made. And then just continuing to stay in good relationship with our bankers and going to them and saying, what creative ideas do you have? You know that our business model is a cash out refi model. It's been that model for the past decade plus. What creative ideas can we come up with to continue to make that happen in this lending environment?
No, it's a great point. We've done all the above. It's interesting. Most of our business has historically been built around, Fannie, Freddie, CMBS, a few other larger regional lenders that are really niche, depending what type of program we're looking for. But our business is spread amongst multiple states, and so it was always very difficult to establish that local relationship. We could establish it maybe in one of the markets where we own properties, but like for a large scale across our entire portfolio, that was nearly impossible to achieve. So we thought, we've actually a couple of years ago, a local bank, Valley Bank, they're actually a very large regional bank, but they're based out of Tampa here. They've lent some money to us on a few projects here in Florida, and have since followed us around to a number of other markets that are outside of their lending markets. And the programs change slightly when it's outside of their the 5 states or so that they're based in, but the relationship has allowed them to do something that no other regional bank has ever considered doing with us. And the consideration that we're having now, though, is, we don't have a huge depository relationship with them. We tend to, our depository relationships with Truist is because it's one of the big institutions or one of the larger institutions out there. And again, given the shakeup, we just had this conversation today, given the shakeup with these couple of regional banks going down, it's like, well, in order for us to grow this relationship with Valley and to do more deals with them and to have more flexibility and just create that deeper bond, which will, benefit both parties in the long run, we really have to look at shifting pretty much all of our depository relationships over to them. But then ultimately at that point, it's all eggs in one basket, right? And so like there's some concern there, which that wouldn't have been a concern a week ago. Like that wouldn't even have been a thought that crossed my mind a week ago, but now it is. And so anyway, just it's interesting the dynamics that have played out that no one really saw coming. Maybe some folks saw coming, but like that now are making shifts in decision making and how we're running our business. So, but no, the definitely the local banking relationships are amazing if you can build them. And as you spoke to, really the Blue Ocean strategy being, I'm looking at Rochester on a map. I didn't realize that it was an hour and a half south of Twin Cities. So you guys really are. I mean, you are outside the reach of institutional investors for the most part, unless it's just maybe a one-off or two-off deal where it's a brand new development of a large scale property. They might just like kind of tack it on to something they own in the Twin Cities, but for the most part, they're not playing in your backyard at all. I can't imagine. So
don't come here. It's a terrible market.
Yeah, right. No, we've got a number of those markets as well. Those more, secondary, even more tertiary markets that are, that are just, again, have just outperformed across the board. And again, not as much competition, nearly not as much competition, and lots more opportunity to be had. So with all that being said, Elaine, I know that we're bumping up against the time here. A lot of fun having you here on the shows and learning about your business. Appreciate you taking the time with us today.
We have so many similarities in our
I know, absolutely. Infinite returns. I love the model. Tons of similarities. Good. Yes. Yep. And we didn't even get a chance to really talk about, kind of how you guys structure your investments. And again, just speaking to the similarities of what you do and what we do, we're really looking for long-term holds, infinite returns on high quality properties in great markets, and getting a return of capital in a short period of time, and then holding those properties for the long term, and just distributing that cash flow out on an ongoing basis for a very long time coming. So it's a beautiful model.
music to my ears.
Again,
Warren
as we
Buffett
said, one of
said,
the biggest regrets that you and I have both, and everyone listening here, if you guys have talking to anyone that has been a real estate investor for 20, 30, 40, 50 years, that's built a lot of wealth in real estate, you always find that they've got regrets about properties that they wish they would have held on to, that they sold. They were performing great. They had a big check that came their way, but it's really hard to go replace a high quality property and go find another one of equal quality. It happens. It definitely does. But like, if once you've owned a property for a long time, you've got all your capital back out of it, all the skeletons that are in that property,
yeah,
all the good, the bad, the ugly, right? And
I always,
you've de-risked it for the most part. And
yeah, I always say, like, it's like making friends, right? Like, it takes time and effort to learn
yeah,
about someone and what they like, what they don't like, what they enjoy doing, what kind of connection you have. Well, then you don't just like end your relationship with that friend to make a new friend. You keep that friend and you make more friends. You can do the
that's
same thing in
great.
real estate investing.
I love that. Now there are, I mean, again, I'm sure we can all think of a property. I can think of one right away, and I'm not going to mention, but that it was like the albatross, just like cutting off the circulation. We got to get rid of this thing for whatever reason. It's just too many skeletons. Let's move on.
Right.
Let's cut ties and
Yeah.
move on. But most of the time, that is not the case. So anyway,
Yeah.
Elaine, pleasure having you on the show. For those that want to learn more about you and just about your company and the offerings that you guys have, where's the best place to track you down?
Yeah, our website is meetblackswan.com, meetblackswan.com. We have a passive investing guide up there, all sorts of other resources, our newsletter. We have a monthly Zoom call where we teach on a various real estate topic and do some Q&A, a Facebook group, all sorts of resources. They're all at meetblackswan.com.
All righty, fantastic. Well, thanks again, Elaine, for
Yeah,
joining us here
my
today.
pleasure. Thank you.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.